Good afternoon. This is Ken Long from Tortoise Capital with the Trade of the Week demonstration. Just wanted to show a chart from the chat room this week. One of the members was looking at applying the regression line crossover system to the Forex. So we're looking at the euro-dollar pair here, and you can see the river marked off in the usual way with plus or minus 1 standard deviation, and the 10 and the 30 regression line periods. Identified a sideways quiet channel here, went for an entry in the green circle with an initial stop at the dotted purple line. It moved up, pulled back, found support at the Bollinger Band mean like it's supposed to. Made a second entry here upon clearing this swing high here, and so he's got two entries in the euro-dollar pair. It moves out sharply, gets to a new plateau, pulls back 1, 2, 3 times, ends up getting his exit here for, as you notice, a 5R. He asked us in the chat room to comment on it, and some of the things we were looking at included, first of all, +1 for really good trade execution, and then in terms of just refining our strategy, another thing to maybe consider is if you look back one more time frame to this swing high, a potential for a third entry is what I'm thinking about right here, because you've got two with some money in hand and momentum, and you just cleared resistance, and then so potentially a third entry here. I also look at this point here where the 10 period is, and the price of re-enter the river, tested the Bollinger Band mean here, made a new high, comes back, fails through the Bollinger Band here. I would be considering maybe an exit somewhere up in this area, because we've got what looks to be a sideways quiet channel forming, and then a failure, and at least at the bottom of the river, perhaps get it. If you're not getting at the failure of the Bollinger Band mean, then failure through the river, and there's potential of maybe squeezing another R out of this, because you've got two positions. And if you had the third position in, certainly you might be looking at trimming this once price and the regression lines come back to the river in this area. Although, and I can understand why you would want to stay, because it's finding support 1, 2, 3 times. But certainly by the time it breaks here, I don't know if I would want to wait this far. But still a fantastic trade, and shows, I think, the robustness of the regression line crossover. Here's another, let's see if we get this one on here. Here's another one from the chat room. This was the euro-dollar pair again, and this trader made a regression line crossover short entry here, because you have an RLCO, then ribbon entering the river, and then it came down a little bit, and then the trader exited here, and then did a stop and reverse to go long. After that spike, the price pulled back to the Bollinger Band mean, where the trader stopped, did a stop and reverse, went short, and then it held support at the Bollinger Band mean, and then covered the short here, and then after 3 fractional losses, exited here, and then missed the move up, and asked, what, how to think about this in an organized way. This is my my response. Let's see if we can bring it up just a little bit. Maybe, okay. The first thing I would say is I want you to notice what the primary trend here is marked off by the Bollinger Band mean in the river. So check the slope of the Bollinger Band mean. Really, from the beginning of the chart, this trend is up. How strong is the primary trend? Take a look at where the price ribbons and the regression lines are with respect to the river. They stay out of the river on the upside almost the entire length of this. So this is a strong trend and up. In a strongly trending market then, when price begins to fail from outside the river, our target price is going to be simply the Bollinger Band mean. we would expect it, and we wouldn't be surprised if it held support there. That's what strong trends do. So if you're going to go short a strong uptrend, your first profit target is only to the Bollinger Band mean, and that puts these short trades really into question, because you're not really expecting much return on that. If it behaves like a strong trend, it's going to continue to go up. So now if you look at the 4 yellow circles in places where price failed from outside of the river to go back to the Bollinger Band mean, you have here 2, 3, and 4. So 4 times out of 4, it did what it was just supposed to do, and after each one of those, the upward trend continued, and so that leads us to the next point, number 5. Orderly pullbacks to the Bollinger Band mean in a strong trend where it finds support are opportunities to buy. You don't even have to wait for it to leave the river. You can finding support and beginning to move sufficient reason to buy. Number 6, when the regression lines and the price ribbon are all outside the river, that's a trending market, and you want to be in the direction of that trend. And you can see when all that is out, the river looks clear and it's flowing. That's a strong trend. That's the direction you want to be trading in. Number 7, reversion to the mean trade has limited but measurable value. So it may be that on the move was so great that a simple return to the Bollinger Band mean is feasible on a 2-to-1 basis, but that's the hard place to make money. It's better to let it find support and then buy the pullbacks. Number 8, shorting a weakening target is preferable to shorting a strong trend. So this is a strong trend. I would rather, if I want to go short, I would rather find something that's failing and then go short on demonstrated weakness, which is essentially riding the trend. My recommendation to the trader was double the width of your initial stop so that you don't feel anxiety to get out, and then trade at half the size. And then look to the fact that in a primary uptrend, that primary trend is not violated until the ribbon leaves the river on the far side, which it never did. Even these pullbacks to the Bollinger Band mean don't violate the trend. When it holds support and continues, that's a confirmation of the trend. It's not till the ribbon leaves the far side of the river that you can say that the primary trend has failed. Look, even these pullbacks in here did not measurably alter that Bollinger Band mean anyway. It just kept going up and expanding because the upward moves were overcoming the downward moves. And then I recommend practice not stopping and reversing for a while, trying too hard. Wait for a second signal and a lazy W to form to confirm the change of direction and see how that feels. What I want you to notice is if you had seen this, let's say this was the first signal in the stack, and you saw the move come up and then pull back and then go up, you can buy in here. You don't have to wait for it to leave the river. You can buy it right here where my crosshairs are, because you have 2 higher lows, 2 higher highs, and it found support where it's supposed to at the Bollinger Band mean and taking off. So if you buy this here with a stop below the river, you're never out of this position, and you can ride that entire move. So that's the trade of the week with some analysis from the chat room and how we use the mastermind effect in the chat room to work on our trading practice. So thanks.